Hello, Gina. Welcome to the Crush Rush podcast. I am so excited to talk about today's topic, so I hope our listeners are as well.
I hope so too. I think it's a very important topic.
Right? I mean, so often I think we just don't want to talk about money. And I personally, I feel like the more that I've talked about money, like the better it's gotten. I don't know how you feel about that.
No, 100%.
I love that. Before we dig in, I like to ask all of our guests, what does building a life first business currently mean to you right now?
Well, there's a couple ways I could take this because I have a young kid. She's 4 years old.
Oh, that's the best age.
I know. I'm really loving it. And so there's definitely like family focus in my life right now, marriage focus, all of that. And I think that, it's a blessing that I don't have to work too hard at trying to design my business to fit my life. I feel like it just kind of naturally does.
Yeah.
I get to work from home. Like I just made my husband lunch. He is like 99% of the time cooking. So I'm like, oh, well, that'll be nice for me to do today.
Nice.
He works from home too. Our daughter's in daycare, but she got to stay home for 14 or 15 months of her first, years of life because we both worked from home. And so there's definitely a lot of that built into the business model that I have, which I'm really thankful for. But then there's kind of two more things. Money. Hello. I'll go out on a limb and say this, like, it's really nice to make a lot of money. Like when people say money doesn't buy happiness.
Like it's okay to say that, right?
Yeah, it's okay to say I want a lot of money. And actually, guess what? Your life gets better when you have a lot more money. Of course, it's not going to fix, your health or any like imbalances in your brain or anything like that. But like having more money has improved my quality of life tremendously. And that wouldn't have been possible if I had stayed in corporate in the same way. Mm-hmm. And then I guess the thing that I'm kind of working on right now is that I'm not great at is I got to put the phone away.
Yeah.
I got to get better at like having some boundaries. I've actually been considering, as much as I love working from home, I've been considering getting a outside office so that I can like leave at the end of the night and close the door and not have my office be in my home. So that's something that I'm working on, but it's all a process.
Yeah. I mean, I love the honesty. I think that's so helpful. I want to talk about corporate for a minute. We have a lot of listeners who are similar to me where they've spent a decent amount of time in corporate and are really trying to figure out what that next step is. When was the moment that you realized that maybe corporate wasn't for you and wanted to sort of make a pivot into something different?
Yeah. So I spent 5 years as a small business researcher at QuickBooks before becoming a coach. And then before that, I was working in tech in Silicon Valley in the design organization. And especially at QuickBooks, like I always say, if I went back to a job, I would love to work for Intuit again.
Yeah, which is amazing.
I just think like they're a phenomenal employer. I really believe that. They're, we're both from corporate. So, like the mission statement and the company values. Yeah. And a lot of times that's like really dull and just lip service. Intuit is very serious about their corporate values. Their number one corporate value is integrity without compromise. I have taken that and borrowed that for my own company because they really are great. So I say all this to say, I was having a great experience in corporate. I had coworkers who I respected and I thought they were smart and good at their jobs, which is like goes a long way.
Yeah.
I was being compensated fairly. The work-life balance was really good, other than the fact that I was commuting 100 miles a day, but that's not their fault. That's on me. And I was like doing a cool job. My job was to interview small business owners every day and then help make QuickBooks the product better. So there were a lot of reasons why I shouldn't have been dissatisfied. Like on paper, it was dream job material. Mm-hmm. But sometime around 2019, I just got this like dissatisfaction that was settling in. And it was really disorienting because, like I said, nothing on paper was wrong. Mm-hmm. And I remember the day that it really happened. I was out in the field at one of a QuickBooks customers' home offices doing interviews in person. And then I went to a cafe in San Francisco to work afterwards because I wasn't going to drive back to Mountain View to go into the office. And then I went home after that. And I remember being like, oh, this was my perfect day. I was like out in the world during working hours. I wasn't in an office. And so that's kind of when I was like, okay, I want to try something where I can work for myself. I was so inspired because I was a small business researcher. So it was my job to talk to businesses all day. So that kind of felt like a natural next step. But yeah, it's interesting. I don't have this like, hellish boss, terrible work environment story. I had the opposite. And I think that one of the things I talk to my clients a lot about is you can have ambition that isn't fueled from scarcity and lack. Mm-hmm. You can have ambition because you want more, not because you want to get away from something bad. Mm-hmm. And you can hold contentment and gratitude and ambition at the same time. And that's really how I feel like my, corporate to business journey has been. It was very much like content and grateful, and there's more, and I'm going to go after it.
Yeah, I love this so much. I feel like my journey was actually really similar too. And ironically, I was on a panel right before this, and I was like, I don't have some big like pivotal story. Like if I dug really deep, maybe, but like it wasn't a horrible experience. So I love how you framed that. So today we want to really talk about cash flow. And at the time that this is airing, we're sort of like mid Q1, hopefully have recovered from the holidays a bit. And I think, as a business strategist, the number one question I get is like, how do I make more money? And then we come on here and we're saying like money opens doors and is a great opportunity, right? So why is cash flow and understanding your cash flow so important as a business owner? And why do you think people are so nervous to talk about it?
Yeah. Well, first we have to define cash flow because everybody has a different definition. My definition of cash flow is the timing and the amount of money moving in and out of your bank account. So when is money coming in and out and how much is coming in and out? Mm-hmm. That is different from sales. Sales is, right, like sales and marketing is how many sales am I closing? What's my click-through rate? Like all that stuff. Cash flow really comes down to literally what cash is coming in and out of the bank account and when. And the first thing I would say that's really important to know is like, it's really important to know that cash flow will always be inconsistent, no matter your business model, no matter your industry, no matter your niche. There's no such thing as consistent cash flow. Mm-hmm. Every business has a different amount of money moving in and out of their bank account every month. Every business. And there's some businesses where it is more consistent, but that doesn't mean it's the same. Mm-hmm. And I say that to say, I might be beating a dead horse, but I say this to say, a lot of businesses I speak to, they think other businesses have consistent cash flow. Yeah. So then they have a false ideal that they're trying to reach. And then they're constantly disappointed when it never happens. And then they get discouraged. So I'm like, we first have to make sure that we're not operating out of the premise that other people have this mystical consistency that you don't have. That's not true. I've seen over 1,000 profit and loss statements. It's false. In fact, even like the most consistent, like I think like maybe real estate might be one of the more consistent business models where you're getting, rent checks every month. Mm-hmm. They don't have consistent cash flow. They have people moving out in and out and people skipping out on payments and the whole shebang. So we really have the root there. It's going to be inconsistent. And that's okay. Now, the next thing we want to know is what is my business's natural cash flow rhythms? Mm-hmm. It's going to be really different for everybody. My wedding photographers, they're going to have seasonality with wedding season. Duh. So to expect that February will make as much money as July is insane. And again, it's all about like, are you setting yourself up for false ideals that then set you up for failure and then feeling disappointment and then feeling discouraged. And then you go into a loop of avoiding your business for 6 months. We really don't want to do that. So we have to first examine like, okay, well, what is my cash flow? Do you even know? Do you know, hey, over the last 12 or 18 months, here's my revenue streams in my business, and here's exactly how much cash each revenue stream brought in each month for the last 12 months. That's invaluable information. Mm-hmm. It's so important for me to know, these products sell at this time or these services sell at this time. And it's not just like product-based businesses either. It's service-based. It's all businesses. I have a personal trainer that I work with, and she, you would think personal training, you could probably sell that all year round. Yeah. Right. She has pretty extreme seasonality in her business. And it was unexpected until we looked at her profit and loss statement. We didn't know, because you would think, well, let me ask you, when do you think a personal trainer is going to make the most money?
Probably January. Like, you know, new year, new you
me
kind of thing.
I thought that too. That was my initial hypothesis. You know when she makes the most money? Q2 and Q3.
Oh, interesting.
That, like summer? What?
Yeah.
You would think summer body stuff would happen before.
Yeah. That's so interesting.
It was shocking. And so every December, she would come to me and be like, sales are down and no one's buying during the holiday. And we worked on it for a couple times, like working on the mindset around selling in the holidays and all of that. And eventually I was just like, what's your natural seasonality? And she said, okay, Q2, Q3, biggest quarters. Yeah. Q4, Q1, dead. And I'm like, what if we stopped fighting against that and went with it? Mm-hmm. How could we double Q2, Q3? And then how could we bring cash flow in for Q4 and Q1 in a way that makes a little bit more sense, but we're not, trying as intensely. And so it's just so important to know your natural mode, and then you can work with it versus like constantly working against it. Yeah. I feel like business is like a river. Mm-hmm. Are you trying to swim against the current, or are you floating downstream? Yeah. You might see other businesses and you're like, why do they look like it's so easy and I'm struggling so hard? It might be that you're fighting against the natural rhythms of your business.
I mean, that could be a whole podcast.
I know.
I feel like I love the seasonality of this. We talk a lot about quarters and seasons and like taking time off and stepping away. And I think understanding your cash flow can help you make decisions, better decisions around when to do that. Give us a little more insight into how we can better maybe understand our cash flow and get comfortable with what that looks like.
I mean, like I said, better understanding it means literally looking at it. Mm-hmm. For each revenue stream, however you track revenue streams. Is it products? Is it services? Is it channels like Etsy versus Amazon versus my Squarespace or whatever? Literally how much cash came in from each stream every single month? And then the more data you have, the better. And you might not have more data. You might be in your first year of business and you're just starting, but just getting to know that and then tracking that every single month is really step one. You want to become very intimate with the patterns. My business has crossed the 7-figure threshold, which is very exciting. And a lot of people might imagine that I have outsourced a lot of things. And one of the things that people consistently get surprised by is that I still do my own bookkeeping. Every single month, I do my own bookkeeping myself using the spreadsheets that I give my clients.
Well, you probably love it, I would hope.
I do like it, but it's not even that I love it. It's like still data entry, but I'm like, it's valuable. Mm-hmm. The only reason I do it is because it gives me insight. Mm-hmm. And with that insight, I'm like always on top of what's happening financially in my business. So I'm always able to make in the moment decisions versus waiting till the end of the quarter for my appointment with my accountant.
Yeah.
You're already 3 months behind, right? So I think that like really getting intimate. And then from there, then we start having follow-up questions and then stepping outside of the P&L. Oh, why is it that the last 2 months I had the highest cash months ever with this service, but this service that normally does really well tanked? What happened? And then we start going out into our marketing and we start looking at, okay, our social media engagement, our email click-through rates, however we're advertising. It gives you the natural follow-up question. Mm-hmm. And from there, you then can solve the problem.
Yeah.
But you can't solve the problem if you can't define it.
Yeah, I'm such a big fan of data. And I feel like just thinking of cash flow as data is so important. And I love how you said just embrace inconsistent income because it happens.
It's not going away.
I want to talk about normalizing paying yourself. Mm-hmm. And especially when you do have inconsistent income, because a lot of people will say, well, it wasn't as much as this month or it wasn't as much as last month. So I'm going to pay myself more or less. What are your thoughts on that?
Yeah. I think it's funny the way you phrased the question. You said, how about paying yourself, especially when you have inconsistent income? And again, it's like, that's everybody.
Always. Yeah.
That's not like, there's no special case. There's no special case.
Yeah.
That's everybody. So if it's everybody, how are some people paying themselves and how are some not? I'm really strict with owner's pay. Mm-hmm. Really, really strict. Because owner's pay, no matter how you pay yourself, if you're on payroll or distributions, however, like your legal status is, owner's pay is like the largest financial boundary you have with yourself. And every time you don't pay yourself, you're breaking that boundary and you are diminishing your self-trust. Mm-hmm. Think about that. Like, it's like, imagine you said, it's similar to like a weight loss journey. let's say I set up a really big goal of being able to lift 250 pounds. I don't know anything about weight loss. I want to lift 250 pounds. But then every time I go it's my time to go to the gym, I decide not to go. Mm-hmm. I decide, I kind of feel a little bit sick, or you know what? Oh shoot. I have this appointment I have to go to instead. You're breaking your self-trust. You're saying my goal doesn't matter every time you do it. And then by the end, you're going to just be like, I just don't think I'll be able to lift 250 pounds. Mm-hmm. That's what you're doing with owner's pay. Every time you say, well, I didn't make enough cash this month, so I'm not going to pay myself. Or you know what? The business has debt, so I better pay that first. You're saying you don't matter. Mm-hmm. And I know you may say, Gina, it's not that deep. What if it is?
I agree that it is. That's why I'm curious. I was curious your answer. I agree with you.
So we start with the mindset. We start with your mindset has to be, I am non-negotiable. I am the most important person in this business. If I don't get paid, nothing else we're not going to keep doing this thing for long. And I'm not less important than paying Zoom or than paying my contractor or than paying like all these other things that I always pay. Mm-hmm. And then the next step, what things exist in your business that you do pay every single month consistently? Can you identify one thing that you pay consistently every month? And now I want you to ask yourself, how do you pay that with inconsistent income? You're using the excuse of inconsistent income in your owner's pay, but you're not using that for your bills. Mm-hmm. So is it really true that it's inconsistent income? No. Now let's talk strategy, because that's the last part. The strategy is really simple. First, you have to pick an owner's pay that your business can afford by finding your average monthly profit. So average cash in minus average expenses equals average monthly profit. That's what we have to play with. Your average monthly profit has to pay for you. Part of it has to be used to save for taxes. And if you have business debt, your debt payments come out of that too. So you have to kind of finagle those three things.
Yeah.
Then you're going to pick a number and you're going to stick to it. And it doesn't matter if it's small right now. The goal is the habit, not the amount. So let's say I pick $500. Okay, great. Now you're going to add that $500 to your expenses budget. So let's say your average expenses were $1,000. In your brain, you have to now update that number and say, no, my expenses are $1,500. Mm-hmm. You have to include you in the budget from the top, because that becomes your new sales goal. I can't tell you how many people have sales goals based off of their break even, but their owner's pay is not included in the break even. I'm like, so of course you're consistently underselling. And then you're celebrating when you hit your sales goal, but then you're wondering why you never get paid, because your owner's pay has to be in the budget. Yes. And then anytime you make more than your break even, let's say I have a $3,000 month, but I only need $1,500 to pay myself and pay my bills. You're going to save the difference. Don't spend it. Don't give yourself a big bonus. Don't pay off a credit card all at once. You need to build a cash buffer in the business with the high cash months, because when, the next month comes and you only make $1,000, but your bills are $1,500, you're going to use part of your savings to pay for you. Mm-hmm. That's how we create consistency in cash flow, even though the reality is it's up and down. So it's really important to know a number, stick to it, budget into the break even, and then save during high cash months. So many people get a high cash month and immediately think about spending it. They immediately go, now I can invest in that program I've been looking at. Now I can pay off that credit card. Now I can, a lot of times it's now I can finally pay myself because I haven't paid myself for 6 months. And it's no, save it and then build consistency in your owner's pay. And then we can start stair-stepping it up to a place where it's actually a living wage. Because I don't know who $500 a month is enough
right?
For. I know, unless you're independently wealthy, which case, congratulations.
I love the examples though, because your energy is contagious, but also it just makes it feel very doable. I'm curious, best practices. What do you recommend in terms of having, and I can't think of the term, and my husband and I just talked about this, in terms of a long-term cash flow of you can pay yourself for 6 months if you don't bring any other income. I can't remember the
word
term.
Is runway. I think that's the
runway.
Word.
Thank you.
Yes. So I teach a cash flow management system called the cash flow waterfall, which I invented when I was a side hustler trying to quit my job. And I had that problem of I made all this money as a side hustler, but I didn't make any money, Gina, myself. And I want to quit my job. So I have to pay myself. So that's where this all came from. It's really simple. You have 3 bank accounts. checking account, working capital. That's a fancy way of saying savings. And then tax savings separate. Mm-hmm. Tax savings gets saved once a month when you reconcile your books. So we're going to put that on the side right now. Put a pin in that one. In your checking account, I never want you to have more than 1 month's expenses. Mm-hmm. So that $1,500, right? Your owner's pay plus your expenses. If you, and that will be your new buffer. We call it your buffer number. I want you to think about your checking account like a bucket that fills up with water and then overflows. Mm-hmm. We need to know what is that overflow point, because a checking account could technically be filled up with as much money as we want. So the overflow point is your buffer number. It's the $1,500. Now, you might not have a perfect number like that, 1,500. It might be like 3,792. Just round it down to the nearest thousandth for your sanity. Yeah. Okay. So $3,000, $1,000, whatever it is. That's your new buffer number. Now, what do? Every time you log in, and you have more than that, you move the money over to working capital. I recommend, as a baseline, 2x in working capital, 1x in checking. Mm-hmm. So that's 3 months overall. Mm-hmm. But that's not a hard and fast rule. It really depends on your business model. Mm-hmm. It depends if you have intense seasonality. If you're, I have a client who owns a specialty food store and a cafe in a very touristy town. So it's like summer, basically like May through Labor Day, big money. Then it gets quiet, and then they get a little bit of a spike for the holidays. And then January, February, March, April are like rough.
Yeah.
So I would never tell her, hey, just keep 2 months of cash. I would tell her in the summer, you want to build up to probably 6 months. Mm-hmm. So use that in context of what you know now about your cash flow, which is why it's important to know your cash flow so that we can plan for these things too.
Yeah, so good. Okay, I want to shift just a little bit. What's one mindset reframe that would be helpful if you're listening around, okay, I need to think of this differently. It's okay to be inconsistent. And you've given us so many great formulas to apply that it feels very doable.
Okay, one mindset. Well, what do you think is the biggest mindset struggle that people have?
I honestly think it's what we're talking about. I think it's normalizing that your income will be inconsistent as a business owner.
Yeah. First of all, talk to other business owners in your industry and be honest. It's scary, but be honest and just be like, hey, what's going on with you? Normalize it by talking to other people, because I promise you're not alone. It's the money stuff. It's interesting. So I deal with a lot of financial shame in my work. And one time I looked up the definition of the word shame, and it blew my mind. Shame is the feeling of humiliation or distress caused by the consciousness of wrong or foolish behavior. So if we break that down, feeling bad, humiliation or distress in your body, caused by the consciousness of wrong or foolish behavior. I feel that in my body because I believe I did something wrong or dumb. Mm-hmm. So there's only two potential realities. Either, yes, you did do something wrong or dumb, in which case you just have to correct the system that, allowed for that error to begin with, and then forgive yourself and move on. Or the alternative is you didn't do something wrong or dumb, so there's no reason to feel shame. And that's actually way more common than the other one. And that's kind of goes back to why I reinforced inconsistent income is normal. A lot of people feel shame about inconsistent income because they think they did something wrong or foolish. And I'm like, you didn't. That's just business. Mm-hmm. Same with debt. A lot of business owners feel like they did something wrong or foolish going into debt, when in reality, debt is a business tool. We spend money to make money, and sometimes we use debt to do it. Mm-hmm. And so the more you can expose yourself to these realities, and the more you can question yourself, did I actually do something wrong? Mm-hmm. Really? Or is what I'm experiencing actually out of the norm? So many of us just feel alone in our struggle. And the reality is the struggle is just par for the course. So the feeling yes, it's still challenging to manage inconsistent income. I'm not saying it's like a walk in the park. It's still challenging to stick to paying yourself consistently every month. But what I am saying is you adding shame on top of that makes it 10 times harder. let it be hard on its own. Take the shame off. It's like shame is like a backpack with rocks in it.
Yeah.
And you're hiking up a hill. Hiking up the hill is still hard, but it's harder with the backpack with rocks in it. So put the backpack down.
Oh, so good. I want to ask a couple just quick, like fast action questions, rapid fire. What's your favorite financial tool that you're using right now?
Oh, my favorite financial tool is probably my profit and loss spreadsheets. I make my own financial tools because they're better than what I found on the market. I have to be honest, not to be self-promoting, but really like I actually just like love my spreadsheets and I love designing spreadsheets. So yeah, I would say that's my favorite right now.
I love that. What are you reading or listening to?
Oh, I just started reading 10X is Easier Than 2X.
Oh, that's one of my favorite books.
I'm like really late to the game, really late, but I'm like, I'm seeing this. I see where this is going. And I feel like I'm actually
books that you could read over and over again, honestly.
I'm listening to it and I'm like, now I need to buy it and take notes.
Yeah.
I feel like I have done it for the last 5 years inadvertently. And now I've actually hit this point. Cause when I started my business, I'm like, I want to make $1 million. And then I made $1 million. Amazing. But this year I kind of plateaued. I hit $1 million again. So 2 years in a row. And I'm like, oh shit, I need to go for 10. I was trying to go for 2.
Yeah.
And that's been very helpful as I come into end of year planning.
I love that. Well, you're going to have to come back when you hit the 10 and you're going to tell us your tips. Looking back, what would you tell yourself when you were just starting your business journey, especially as it relates to money and wealth?
Yeah, I would say, first of all, like I'm thinking about the side hustler in 2020 who made $28,000 that first year with a full-time job and who got pregnant halfway through the year and had like morning sickness and all of that. So there was a lot going on in 20 and the world,
right?
Hello. And the pandemic. Yeah. So there was a lot going on in 2020. And I think like I was so thrilled with every sale. And like, I would make $10 and be like, this is amazing. And I think like definitely holding on to that magic, I definitely would have paid myself earlier. Mm-hmm. And then if I could go back and change literally one thing strategically, I invested $10,000 into an ads and funnels mastermind when I had only made like $15,000 so far. I would go back and be like, stop. Don't do that. Not because the program was bad, but because it's not what I needed at the time. I was trying to solve a future problem. And like, I was trying to jump through. I was trying to get to $1 million from 15K. Meanwhile, I didn't know how to sell a $2,000 program. So I'm like, I was trying to skip too many steps. So I would probably be like, girl, use that money for something. Maybe just pay yourself.
Yeah. Oh, I love that.
And actually that kind of, sorry, to distill that down. The more I've thought about this, the more it's true. The slow way is the fast way. You think it's slow to like not do the funnels yet and to like learn how to do a sales call and it's boring, but it is the fast way. Because if you do the ads funnel like I did, you're just going to waste 6 months and $10,000. And then you're going to have to go back to the beginning and still learn the fundamentals.
Oh my gosh. We have such a similar story. I feel like I did the exact same thing. And I had, I
think it's the corporate mentality because from corporate, you're like, I can see how this all works.
Yeah.
Just
like take me to the money at it. I know.
And it's actually a little bit different.
Yeah. Totally have to slow down to speed up. I feel like you have so much energy around money and I love it so much. I know our listeners are going to want to connect with you. Tell them where they can find you, learn more, get all of your amazing spreadsheets and tools.
Yes. Come find me on my website, www.ginaknox.co, not com. Although I think there's a redirect anyway. So if you type it in, it'll be fine. And then I host a weekly podcast, Small Business, Big Money, where I talk in depth about all of these topics and more. And there's over 200 episodes. So there's a whole library that you could listen to and learn a lot about small business finance and wealth building.
So good. Thank you so much, Gina.
Thank you.